What is going on, guys? Nick here, back with another video. I did my first video on AMD back in November, right after the Xilinks deal was announced. And since then, the stock has done a whole lot of nothing. Typically, we all look to buy low and sell high. So I thought I would take another look at AMD and all the progress they've made over the past 6 months, as well as looking at the most up-to-date analyst forecasts, my valuation, and then I'll close it out with a little technical analysis. So since I've already covered a lot of the basic detail in my first video, I'm going to make this a very quick recap. So AMD, if you don't know, they make computer chips. They specifically excel in high-performance CPUs used in, for example, gaming computers, data centers, and semi-custom chips. AMD in 2014 was on the brink of bankruptcy until Dr. Lisa Su took over. They were on the verge of running out of money and having to file for bankruptcy right as Dr. Su took over the role as CEO. She worked to refocus the business around what they do best, which is high-performance computing. AMD has seen a huge turnaround under Su's leadership, with the share price going from a low of $1.61 in 2015 to an all-time high of $99 in 2020. Customers have been very satisfied with the impressive performance AMD chips have provided at reasonable prices. So AMD breaks this business down into two segments. The first segment is computing and graphics, which are desktop and notebook microprocessors, accelerated processing units, and their data center and professional GPUs. The second segment is enterprise and semi-customs. This includes server and embedded processors and semi-custom system-on-chip products, which are basically entire computer systems on a single chip, like what you see, for example, in the Xbox and PlayStation gaming consoles. During the fourth quarter earnings release, AMD reported a 46% increase in computing and graphics sales. These sales were driven higher by sales from Ryzen, which is their main CPU line, and Radeon, their main GPU line, as well as a 286% increase in enterprise, embedded, and semi-custom net revenue. The enterprise and semi-custom segment saw a 65% increase for the entire 2020 year compared to 2019. AMD credited this growth with higher sales of their EPYC server processors and higher semi-custom revenue. Also, keep in mind that the new Xbox Series X and PS5 launched in November of 2020, and they're using AMD semi-custom software on chip products in their consoles. 3 months later, the first quarter earnings saw continued good news. The work-from-home trend has continued to drive their sales, and AMD benefited with continued high demand for their EPYC processors as well as their Ryzen and Radeon products. AMD also revealed in the first quarter that they expect increasing expenses related to product development because of competition with Nvidia's GPUs and Intel's CPUs. They expect this to put pressure on their margins because of the increasing expenses related to product development as a result of this competition. Currently, Nvidia is extremely powerful in the GPU market, dominating as much as 82% of the DGPU market, which are sales of GPUs not pre-built into computers. AMD has only about an 18% market share, and if most people are being honest, they would say that AMD has struggled to take this market share from AMD. Nvidia is also in the works to acquire ARM, which has the potential to compete with AMD and Intel's x86 CPUs. ARM chips have typically been used in tablets and smartphones because they're very power efficient and don't need large cooling fans. But this power efficiency is because of a simplified chip design that also limits ARM chips' overall computing power. However, ARM chips have really come a long way in the past couple of years. Apple, who recently released a MacBook powered by the brand new Apple M1 CPU, chose to design the M1 as an ARM processor instead of an x86 processor. So far, the reviews for the M1 chip are very positive, with most tech reviewers really impressed with the power efficiency and processing power of the ARM chip. In the past, AMD has explored ARM chips. In 2014 and 2016, there were rumors and announcements around a possible K12 chip that would include a custom 64-bit ARM 8-core. But the release date was scheduled between 2017 and 2022, and so far there haven't been any updates. I've also seen other information about a possible M1 competitor AMD is working on with Samsung. But these are only expected to use AMD GPUs, and the CPU seems like it'll be an Exynos branded Samsung chip. In the AMD vs Intel battle, AMD has been very impressive here. What makes Intel unique from AMD and Nvidia is Intel both designs and produces their own chips. While AMD and Nvidia both design their own chips, they have a partnership with Taiwan Semiconductor, or TSMC, to produce their chips. Transistor size is an important component with semiconductors. Generally, the smaller the better. The smaller transistors reduce the distance electrons have to travel, improving calculation speed and energy usage. But getting these transistors smaller and smaller is a very difficult manufacturing task. In 2014, Intel launched launched its 14 nanometer chip with plans to release its 10 nanometer in 2016 and 7 nanometer in 2018. At the same time, AMD was still producing 28 nanometer processors, but Intel ran into huge problems trying to manufacture these chips, and this has caused delays producing their 10 nanometer chips. AMD released the first generation Ryzen in 2017 on a 14 nanometer processor that had some advantages and disadvantages compared with Intel at the time. In 2018, AMD released the third gen of Ryzen, based on a 7 nanometer processor. The third generation Ryzen performance is very close to the 11th generation Intel processors running the 14 nanometer chips, but AMD's comes at a much better price. AMD's advantage here comes from TSMC's manufacturing superiority over Intel, at least when it comes to transistors. And TSMC plans to start producing 5 nanometer processors later this year. The Ryzen 4th generation will run on these 5 nanometer chips and should be about 40% faster than the Intel chips. Okay, quick editor's note, I do want to point out here that Intel does have 10 nanometer chips on the way for desktops. Earlier this year at CES, Intel announced the Alder Lake will launch towards the end of 2021, but there's still a lot of details that we haven't heard yet about its capabilities. On April 7, 2021, it was announced that both AMD and Xilinx shareholders voted to approve AMD's acquisition of Xilinks. The deal still has to pass regulatory approval, but it's still expected to close at the end of 2021. If you want more details about this deal, I highly recommend checking out my first AMD video I made just shortly after this was announced. So let's take a look at how AMD is performing financially. But before I do that, these videos do take a lot of research and effort for me to produce. I would really appreciate it if you could help me out with the YouTube algorithm by just scrolling down and giving me a quick thumbs up if you like this video so far. So looking at revenue, operating income, and net income, we see since 2015 AMD has continued to do very well, consistently growing its revenue and net income each year. We do see there was a huge jump between 2019 and 2020, but the jump between 2020 and the 2021 trailing 12 months has been far more slight. However, keep in mind that this 2021 trailing 12 months shares 3 of the same quarters, so it's really just the difference between quarter 1 of 2020 and quarter 1 of 2021. When we look at their expenses, we see pretty consistent spending in both marketing, general and administrative, and research and development. The cost of revenue has given them a pretty good amount of room to work with, leaving them with 37 to 45% gross profit margin. This chart shows the revenue and profits broken down by their 2 business segments. The chart on the left is the microprocessors, so mainly CPUs and GPUs. The right shows semiconductors, system on chips, and server and embedded processors. We can see how the computing and graphics segment has been the more dominant segment relative to their overall revenue and profits. But AMD is working to grow the enterprise, embedded, and semi-custom segment. The Xilinx deal is a push to compete in the data center business using Xilinx field programmable gate arrays, which each customer can adjust to work for their own specific needs instead of CPUs that are more generically designed. Okay, so let's take a look at AMD's valuation and see what they're worth, as well as a little technical analysis to see if now is a good time to buy. When we look at AMD's forecasted earnings, we can see that revenue is supposed to continue pretty rapid growth, but earnings isn't projected to increase by quite as much. Using the 2023 forecast, and before I do that, let me stress that this is a long time away and a lot of things can change over that time span. Using the past 12 months finances as a starting point, revenue is projected to grow 67%, while net income is only projected to grow by 41%. When we look at the historical and forecasted revenue and earnings growth, we can see that revenue is projected to slow down over 2022 and 2023, but earnings is still on pace to grow over 20% for those 2 years. This great website, macrotrends.net, shows historical PE ratios by quarter. It seems that between December and today, the stock price has settled down to a PE between 44 and 33. Using my PE reverser tool, this correlates to a growth rate between 14 to 17.5%. And this seems to be about what you would expect when you look at the historical and forecasted growth. So for AMD, I'm going to use a growth rate of 13 to 18% for my valuation, just slightly wider than the PE correlated growth rate we've recently seen. This comes out to a fair PE range between 30 to 46. This chart shows the current share price as a line in orange with the area at or below the green line representing a significantly undervalued share price. The gray and blue area show the fair value range, and above this is an overvalued share price based off of the earnings forecasted for that time span. Keep in mind that the price going over the blue doesn't mean that the stock is expected to crash and burn and fall back. It just means that you may not see as significant returns until the underlying earnings catch up with the stock price. Based on this chart, I think you could expect by 2023 to be up by 24 to 90% if you owned AMD at the current $81 share price. Now, looking at the stock chart, it actually looks pretty ugly with the 50-day moving average below the 200-day moving average. It does look like there's been some rebound since the May lows, but the MACD seems to show that momentum might be slowing. If you were looking to buy today, based off of this chart, it's not looking to me like an immediate rebound is about to happen. What I would recommend if you do want to buy AMD shares is to just take the amount that you want to buy and divide it into smaller chunks. Then it would spread this out over a time span and then slowly buy shares over the next few months to a year. If you see any good dips, you should definitely get aggressive buying. Most brokerages will allow you to do automatic reoccurring buys, so this is probably something that I would consider. So now I own AMD shares and options, and I don't plan to sell anytime soon. I do think the insanely rapid growth that we've seen since 2016 is over, but still 24 to 90% over the next 2.5 years is still very good. But it's up to you to decide if this is enough upside to be worth it. AMD is a very solid company with a bright future. They've capitalized on great business execution under Dr. Lisa Su's direction, as well as being in the right place at the right time as Intel struggles with manufacturing. Now, if you like this video and you want to see more, make sure you hit the subscribe button and the bell notification so you know whenever I upload a new video. And as always, thanks for watching.